Hey guys, what's up, what's going on? My name is Rob and welcome back once again to the channel to do another video, and welcome to joining me on this dividend investing journey that I've been doing on this channel for the past year or so. In today's video, I'm going to be showcasing to you guys my top 5 best performing stocks, I would say, in the past year or so. We started this dividend based portfolio that I'm going to show you guys in the beginning of 2020 in January. So I guess it's about the past year or year and a half or so now. I'll show you guys my top 5 best performing stocks, and towards the end of the video I'll show you guys my number 1 worst performing stock. But before we get in the video, there's a few things I want to talk about, because when it comes to like analyzing how good a stock has been performing, there's a few key important things to mention here. So let's mention a couple things just before we get into this, so you guys understand what I mean by when I say best performing stock. So it's important when it comes to best performing, when you analyze your portfolio for your best performing stock, to understand that stocks are always constantly growing or going down. And just because a stock isn't at a good return right now doesn't mean that it won't be in the future. In fact, all these stocks I have inside my portfolio are Canadian, mostly Canadian-based dividend stocks, and these are stocks that tend to grow in the long term. So just because some of these stocks are sitting a little bit lower or sitting a little bit higher doesn't mean that they're not going to be good in the future. And in fact, some of these best performing stocks I have right now, maybe like 5 years from now, could be some of my worst performing stocks. It just kind of depending on when you bought the stock and how long you've been holding it and where it's at, that's going to really influence these returns. So understand that it's going to be different for everybody. And in this video, I'm just going to be kind of basically showcasing you to you guys my results, and we're going to be focusing on percentage gained, not actual total income from the stock itself. So if you've been buying a stock throughout the whole entire year, you're obviously going to have a lower return percentage wise than a stock, let's say you bought last year and you just didn't do anything with it, you just kind of held it. That stock will probably kind of be sitting at a higher return rate, but because this portfolio, we've been regularly putting money in on a regular basis, I think it's safe to kind of say that most of these stocks have been kind of performing at the same level, and it's pretty fair across the board. So in today's video, like I said, we're going to focus on the percentage, and we'll start with the very first stock here, which is going to be my best performing stock. Before we get in the video, guys, I just want to say really quickly, if you guys are enjoying the video, please do me a big favor and give the video a big thumbs up. And if you guys want to join me as I build up my dividend based portfolio and I work myself towards financial freedom, be sure to subscribe to the channel. Alright guys, so the first stock on this list is going to be none other than one of the most hottest stocks over the past month or so, and this is going to be a funny place and this kind of just illustrates the point I talked about earlier about how, if a stock is performing low at one point, it could jump really quickly to be your best performing stock depending on what happens in the market. And the stock I'm going to be talking about is none other than Shaw Communications. So if you guys aren't aware, I bought Shaw like kind of when I first started this portfolio. It's actually the first stock I bought. I kind of bought a few shares here and there, but the stock wasn't performing well, so I kind of dropped it. I do have it in some of my ETFs, so I was like, you know what, I don't think I need to really hold any individual shares. But oddly enough, the stock actually jumped up quite a bit when Rogers bought Shaw over the past month or so. So you guys probably have heard of this, but Shaw shot up all the way up to 40%, basically what it's sitting at in my portfolio right now. As an individual share, I do hold it in ETFs, but as an individual stock, it's actually my best performing stock. Ironically enough, that's just kind of the way the stock market works. So Shaw kind of jumped up. We'll have to wait and see what's going to happen, but my number 1 performing stock right now is Shaw Communications. At the time of doing this video, I currently own about 11 individual shares of Shaw Communications, which represents $364 in my portfolio, and the stock is up $101, which is 40% all time, and currently represents about 1.35% of my TFSA. And my second best performing stock inside my portfolio is going to be none other than a stock I actually really enjoy and I've been buying a lot, and that is Manulife. So Manulife is a company that did really well during the pandemic, and when I first basically started this portfolio, it was during the pandemic, right? It was kind of in January, then the pandemic hit in March. So I was buying a lot of stocks at discount prices, and Manulife is a company that kind of throughout 2020 to 2021, their stock price went down a lot, but the company was just performing really well. So I kind of looked at this and I was like, you know what, the company's doing really well. They're having good earnings. They're historically a pretty decent company. I'm going to buy the stock, and I think it was a good buy, and the stock went up. And actually, we've seen this over the past year or so, that kind of recovery kind of kick in, and the stock has just done well, and it's been performing really solid for me inside my portfolio. And I'm going to continue to buy Manulife because I still think it's a good stock, but it's actually my number 2 best performing stock inside my portfolio right now. When it comes to Manulife, Manulife is currently my second best performing stock. I have 49 shares of Manulife individually inside my portfolio. This is a total value of $1,332. My all-time performance is up $239, which is 22%, almost 22% here, as you guys can see. And Manulife currently represents about 5%. As an individual shares of Manulife inside my TFSA. My third best performing stock inside my portfolio is my favorite stock of all time. And once again, guys, these percentages can kind of get skewed depending on how much stock you buy and when you buy it, kind of thing, right? And my number one stock I've been buying, and you guys might say, well, why is my favorite stock not my best performing stock? Well, this is because my favorite stock is TD, and that's going to be number 3 on my list. And TD, I've been buying a lot this year. I've kind of been buying on a regular basis, so the overall return of this stock has kind of been pushed down because the average price I've been buying over time has kind of been slowly increasing. So TD for me has actually been my third best performing stock, even though it is my favorite stock. And I wouldn't be surprised if, like, let's say over the next 5 to 10 years, if TD continues kind of basically what it did in the past, as being, in my opinion, the number one bank in Canada, it's probably going to be my best performing stock long term. As an individual stock, we'll just have to wait and see. But TD is my third best performing stock. It is a great company. They are one of the best performing banks. They're growing outside Canada. They're expanding in the US. They're expanding in Asia and all those different markets. And they're just growing their earnings, and they're just a good Canadian company. And there's a lot of good banks in Canada, and they are a lot of good growth based. The nice thing about the banks is they're growth based stocks as well as good dividend stocks. And that's one thing I really like about TD. It's that rare stock that has the chance to appreciate in value, but also has a good dividend yield, and they've been growing those dividend yields on a pretty consistent basis. So TD is my number 3 performing stock, and it actually is my number 1 favorite stock of all time. When it comes to TD Bank stock, I currently own 29 shares individually of the stock inside my TFSA. That total value accounts to $2,397, and this is my number 1 individual stock I hold inside my portfolio. I do hold TD more than any other stock by a pretty decent amount. My all-time performance is up $410, and as you guys can see, it's currently 20%, so it's doing quite well inside my portfolio, and it represents about 8.88%, almost 9% of my TFSA. My fourth stock on this list is going to be kind of an interesting stock that I wasn't super familiar with, and it isn't one that a lot of people are familiar with, even though it's been doing pretty well this year, and that's TransAlta Renewables. So TransAlta Renewables is, as you guys would probably guess, a utilities and energy-based company based out of renewable energy. So renewable energy has been getting pretty popular lately, and we've seen a lot of companies that are based out of renewable energy kind of really rise up in share price over the past year or so. And this is one of those companies that did it. Somebody recommended this company to me when I first started my portfolio way back in the day, and I've kind of been slowly buying it over time. It is a nice stock. It's got a nice dividend yield. It does grow on a monthly basis as well. It wasn't originally a stock I was buying too much of, but it just kind of ended up shooting a lot in price, so it's kind of interesting. It's not one I'm going to be super crazy with, because again, I want to see this company grow a bit more and have more consistency with its growth and its earnings. But the share price has definitely went up this year because I think the people are just getting really crazy about renewable stocks, and they are. If you think about it, it makes sense, and they should be the way of the future. So we'll have to wait and see how that kind of goes. But this stock, nonetheless, is performing really well inside my portfolio. So TransAlta Renewables, currently I own about 26 shares inside my TFSA. That is a total value of $530, and the all-time performance is up $84 inside the portfolio, and that's about 19%. And as you guys can see, I only hold about 2% of TransAlta Renewables inside my portfolio, so I don't own a lot of TransAlta Renewables. It is a stock that I've been slowly buying, and I will continue to buy small amounts over time. And my fifth and final best performing stock inside my portfolio is actually not an individual stock. It's actually one of my ETFs, which is really cool, and I'm happy that this is actually one of my best performing stocks, because it just goes to show how powerful ETF investing can be. I know a lot of people get caught up with individual stocks, and they may think that ETFs are boring or whatever kind of thing, and I understand, but they're really solid, and they can get you some really good returns. And here's the funny thing about this, guys, is I've been buying VDY aggressively inside this portfolio very aggressively over the past year and a half or so, and it's actually one of my best performing ETFs, best performing stocks, even though I've been buying it almost on a daily basis. Like every single week, I at least buy one share of VDY. So just kind of goes to show you how powerful ETFs can be, especially if you're buying good quality ones. So VDY is a Vanguard-based Canadian high dividend yield ETF. It actually holds a lot of the companies I individually buy inside my portfolio. It holds some of them, it doesn't hold others, like there's a couple of them, but it does have a lot of the bigger companies like Shaw and TD and CIBC, RBC, you know, all of the banks and stuff like that, Enbridge and whatnot. So that's the reason why I don't buy too many individual companies, because I do have them inside this ETF. There's a couple I like to kind of buy a little bit more of because I want to have higher holdings inside my portfolio, but I do kind of base the bulk of my portfolio off two ETFs, which is VFE, which is a US based fund, and VDY. So VDY is actually really cool, and it's actually my 5th best performing ETF slash stock, whatever you want to call it, kind of thing inside my portfolio. So I'm pretty happy with that, and it's just a good solid ETF overall. And last but not least, guys, here's the power of ETF investing. So once again, I've been buying VDY on a regular basis, which kind of probably pushed this down a little bit. You know, if I would have just bought it or I bought it less frequently, this probably return would be much higher. But I just want to show you guys that, you know, by buying into this stock on a regular basis, you can still do well. So here's the total value. We have 208 shares of VDY. That's a total value of $7,000, almost $8,000 inside my TFSA. So as you guys can see, most of my TFSA is in ETFs. All-time performance is up $865, which is 12%, and it represents 29% of my portfolio. And I have been buying VDY on a pretty solid basis and been aggressively buying it over the past year and a half. Alright guys, so we made it to almost the end of the video, and here's my worst performing stock inside my portfolio. And this is by no means that this is a bad stock or anything like that. And in fact, this just goes to show you that depending on where the market is and when you kind of are analyzing your portfolio, some stocks might be up, some stocks might be down. And my worst performing stock is actually Algonquin Power and Utilities. Now this stock took a big hit over the past couple weeks or so. I think it was like earlier this month in March. There's apparently a big power storm or something in Texas, and they suffered a lot of losses. So this stock basically, which is normally traditionally a really good growth stock and has grown a lot and has a really good company overall, actually took a big hit. So a lot of people are looking at this as being like, you know, it's a good time to buy, and I agree. I think the company will recover, that price will go up, but it just right now it looks kind of bad, right? Because it's my worst performing stock. But in the end, I do think that this stock going into the future will grow and be a better performing stock. Just right now it's kind of down, but I think it's a great time to buy. So at the end of the day, when looking at your portfolios and whatnot, you know, just because a stock is down the most doesn't mean it's the worst stock. It just depends on how things are going when you bought the stock and how the market's currently going. So just kind of want to point that out, but it's kind of cool to look at the different stocks inside my portfolio and see which ones are the best performing ones, which ones are the worst. And the last stock I'm going to talk about, which is my number one worst performing stock inside my portfolio, is Algonquin Power and Utilities. So I have 39 shares, individual shares of AQN, and our total value is $773. All-time performance is down 4.54%, which in the end isn't really that bad, but it is my number one worst performing stock. It's also my only stock that's currently in the negative, so that's interesting as well. Represents about 2.86% of my portfolio, but this by no means this is a bad stock. It just means with the current market and the way everything is going, it is just down the most inside of my portfolio. So anyways guys, that's it for this video. I hope you guys enjoyed it. So let me know what you guys think in the comments if you enjoyed this video, and once again, if you guys liked it, please be sure to give it a big thumbs up and remember to subscribe. That's it for today's video. Let me know what you guys think in the comments, and I'll see you guys later.